Hey everybody, welcome back to the channel Let's Make a Mill, as well as my own personal blog, letsmakeamill.com, where I'm just basically documenting my journey towards making $1,000,000. In today's video, I want to talk about why I love investing into an index, and I'm going to put my money where my mouth is and show you exactly what my portfolio looks like in these indexes. All right, these are my real accounts. There is nothing I'm hiding, and these are all real numbers. All right, so let's get into it. So one reason why I love investing into an index like the S&P 500 or like a total US stock market index is for the instant diversification. When you invest in these indexes, they're already made up of 500 companies. For a total US stock market index, it's made up of over 3,000 companies, right? If you're to take $100 and invest it in Apple, your $100 is tied to Apple's success, or Tesla or Google or whatever all these other popular companies are. Whereas with an index, you're investing in 500 different companies. Your $100 gets split up. So you get instant diversification. Unless, 10 companies fall off the map or whatever, you still have these 490 companies or these 2,900, 900, 90 companies that are still in the index, still making you money. And these are companies that employ hundreds of people. These are companies that are based in, all over the world. They operate in all parts of the world. It's not just, like let's take 3M, let's take Pfizer, let's take Amazon. These companies aren't just working in the U.S. They're working abroad in different areas as well. So that's what I mean by diversification, and that's why I like investing into an index like the S&P 500 and an index that tracks the total U.S. stock market index as well. So on top of instant diversification, the other reason why I love investing into an index is because it's based on history. There's so much data, so much historical data, statistics, and everything based on the performance of the S&P 500. Based on 90 years of returns averaged out, the annual return on an S&P 500 index was about 9.8%. Depending on the year, depending on the article you're reading, some say it's 10.3, 10.2, 9.8, 10%. So, but either way, it's been about 9.8 to 10.2%, right? Annual returns over the long term based on 90 years of historical data, historical returns. Okay. So that has been through wars, that has been through recessions, that has been through depressions, that has been through bear markets, that has been through catastrophes, that's been through everything. The stock market S&P 500 index has returned an annual return of about 8 to 10%. All right. Based on the last 90 years, it's been about 9.8 to 10.3%. So that's, another reason why I love investing into an index, because it's not something that's just based off, 5 years worth of performance. It's based off several years, several decades of performance. So pretend for a minute you have $100,000 and you invested it into an S&P 500 index and you never put another single dollar in there, right? Using the data that we do know, let's use 8%. If you had an 8% annual return compounded on $100,000, in 30 years, you could have $1 million. $1 million, never adding another single dollar, letting it grow, letting it compound over time, and just being a passive investor, right? You could walk away with over $1 million. That's just something to think about. That's very powerful when you look at compounding and you look at the historical return. And yes, the S&P 500 and the total U.S. stock market returns an average, all right, an average market return. Some people don't love average. Some people want to beat the market, but an average return isn't bad. It is not bad. It may not be sexy like, having a 15, 20, 30% return, but the S&P 500 index, or the index in general, has beat almost 95% of fund managers or hedge fund managers. All right. So it's something to think about, and all these people on Wall Street, that are researching stocks, doing this, doing that. You could just put your money into an index and just let it ride. Just let it grow. It's your belief in the U.S. economy that the U.S. economy is always going to come out on top, and it has, and it will continue to, perform very good in the long term. Warren Buffett has, famously said that he would take all of his money and put it into a Vanguard index that tracks the S&P 500. All right. just something to think about. Warren Buffett's one of the most legendary investors out there. And for him to say this and for him to tout index investing is a very powerful sentiment, or a very powerful statement about index investing. Let's look at my portfolio and put my money where my mouth is. So this is my Fidelity account. I have my Roth IRA as well as my own brokerage account with this with Fidelity, and I want you to see what I have here. I have the Fidelity's zero cost total U.S. stock market index, ticker FZROX. I call it FZROX for simplicity, but I have over 60. I have over 60,000. This number isn't correct. I have actually $61,000 invested, almost $62,000. I'm trying to get it to $70,000 in a cash value investment. But if you look at my capital gains, here's my total gain loss. I have received over $6,000 in capital gains. And this is investing through the huge crash that we had suffered through in March when the coronavirus came out and all the markets went down. You know, I just kept investing, kept my belief that the stock market would recover, that the index would recover, and that, you know, I would reap all the risk and returns by constantly investing. You know, so I kept investing when it was going down, and I kept investing when it was going up. And this is what I have to show for it. You know, I have to show a $6,000 return on my $60,000 portfolio. All these other positions, just ignore. I am going to sell out of these at some point in the future, whenever hopefully they return back to normal, or next year whenever I can do tax harvesting. But you know, that's a video for another time. Let's look at my Roth IRA. So here's my Roth IRA, and like I said, it's invested into an index that follows the S&P 500, ticker FXAIX, and that's specific to Fidelity. You won't be able to find this on Robinhood or Schwab or Vanguard, or even M1 Finance. So I have 31,000, I believe. Yes, $31,000 invested into this index, which has returned $8,200 to me, right? Over the past, I think I've been investing in this index for about 4 years now. So these are the returns that I've been able to generate. And like I said, I don't think about it. I just keep putting money into it, and I'm going to let it compound over the long term. So this is my belief in index investing and why I invest in indexes. And to put more money where my mouth is, we're going to look at my actual 401k. Here's my 401k. I have over $70,000 invested into my 401k, invested into VFIAX, which is the Vanguard 500 index fund that follows or tracks the S&P 500 index. All right. So I put my money where my mouth is. I have a firm belief in indexing or index investing, and why I'm going to continue investing in indexes for the long term. So I hope this video was very informative for you. I hope you find some value in it. And, you know, again, I'm completely transparent in all my information that I give you. I don't tell you about something that I'm not doing, or I don't talk about speculation or what I think is the latest, you know, hot tech stock or hot stock tip or whatever. I'm investing in these things, and this is what I'm doing, and this is, you know, the returns I'm getting. So again, I hope this video was very valuable for you or provided some type of insight. If you liked what you saw, please comment down below. Let me know what your thoughts are. Hit the like button or hit the dislike button. You know, subscribe, hit the notification bell, and I hope to see you in the next video. Thanks for watching.